Most people think their retirement is sitting safely in the market, in index funds, in a pension system that's guaranteed. But if I told you a large portion of that money is tied to assets you can't see, you can't sell, and in some cases can't even access when things go wrong. I'm Ben Sterling. I advise executive and board level teams on capital structure and economic risk. Follow the capital. Because where money actually sits is not always where people think it is. There's a massive shift happening in the financial system right now. Trillions of dollars have moved out of traditional markets and into something called private credit. Loans made behind closed doors to companies banks won't touch, packaged into funds, and heavily owned by pensions and retirement portfolios. Here's where it starts to matter. We're entering a period of economic stress. And when that happens, companies struggle, defaults rise, and those private loans begin to take losses. But unlike stocks, you can't just sell private credit. Those are multi-year illiquid contracts. So when losses hit, funds don't just drop in value, they lock up. So what does this mean for you? If you have a 401k, you may already be exposed through funds allocating to private markets. If you're in the stock market, institutions managing your money are exposed. And when they take losses, they rebalance. That pressure doesn't stay isolated. It spreads into public markets. And if you have a pension, this is where it becomes real. Pensions depend on steady returns, usually around 7 to 8%. Private credit has been used to hit those targets. But if those assets slow down or become illiquid, your future payouts, your adjustments, your retirement timeline can all be affected. We're already seeing early signals: rising corporate defaults, increased regulatory scrutiny, and institutions quietly adjusting exposure. The system isn't breaking yet, but the pressure is building. This isn't about fear. It's about understanding where your money actually sits and how risk moves through the system. Because retirement isn't just about saving. It's about what your capital is exposed to. Follow the capital.